Hey guys, welcome to the Stock Sale Flyer. I wanted to do a video chiming in on Adobe stock because a lot of people are talking about it lately. I want to give you a little bit of a rundown of the bear case and the bull case. I'll tell you what I think about it and give you a valuation, tell you what I think it's worth. I won't spend too much time here on the bear case and the bull case because a lot of people have been talking about it enough where a lot of you are going to probably know quite a bit about this already. But Adobe has been beaten down as a stock, and a big reason for that is there's a thought that the stock would be disrupted by AI and lower cost rivals. Things like Nano Banano Pro has come out from Google Gemini, and other AI type products are seen as a threat to the stock. You also have seen Canva and other competitors enter the space. And this has come at a time when Adobe's also seeing decelerating growth in their revenue. And they're also seeing customers start to push back at times against high subscription costs. There was also a failed attempt to acquire Figma, which was kind of a drag on the sentiment around the stock. And so Adobe's been facing a lot of negative sentiment, but we're starting to see some of that sentiment turn, and people are starting to appreciate some of the things that Adobe has done in the right direction. So the way they've integrated AI into the business, one of the things that I actually really became more interested in was the Firefly product. And when I started to really think about how this idea of a commercially safe AI product, what the market for that would be. Major businesses, they want a commercially safe product. They don't want to generate AI content that could be a liability for them or they could get sued for. So the fact that Firefly is commercially safe for businesses and this is seen as an enterprise leader, that really started to make me think about this stock differently. And it did make my thoughts about the stock improve overall. But we got to get to the valuation as well and see what it's worth. Before we do that, or what I think it's worth, before we do that, they do continue to have strong financial performance. A lot of people who like the stock point out that, they've continued to grow revenue. Their margin is really good. The net margin's really good. It was about 30% in this past fiscal year, and they continue to generate cash flow. They are seen as the standard for a lot of creators. And so, despite the fact that the moat has been challenged by AI and some other competitors in the eyes of some, they do continue to be the market leader and the dominant company in what they do. And then they do continue to sell this Adobe ecosystem and build on it. And a lot of people are pointing out that this company is not really showing fundamental signs of dying out. So that's really a quick overview of the bear case and the bull case for the stock. Now, what's interesting here is, regardless of whether you're in the camp of the bull case or the bear case, while that will change the numbers some, I do think that people are acting like Adobe stock might actually be cheaper than it really is. I think part of the reason for that is because the market as a whole is expensive. And so people are looking for value plays. And with Adobe, I think it's not bad priced where it is now, but and I think you could do really well on it actually, but I don't know that it's as cheap as people are making it out to be. And I want to show you some numbers here. So let's say Adobe in fiscal year 26 grows revenue at 9.39%, and then they grow revenue at 9% in fiscal year 27, 8% in 28, 8% in 29, and then 7% going forward through fiscal year 2035. Now, I think that it could be a challenge for them to grow revenue in the double digits going forward. They are seeing decelerating revenue growth. And so I think it's possible that these numbers are more likely that they're going to start to see some continued deceleration in revenue growth as they go forward, as they do face more competition from other competitors, from AI models. I think you have to consider that. And the fact that some people are getting sort of sick of Adobe's subscription fees and how high they are. I think that that's going to move some people to sort of push back, and it's going to make it difficult, even if people don't unsubscribe from Adobe's products, it's going to be difficult for Adobe to continue, I think, to raise the prices on their products continually at rates that are going to allow them to have like double-digit revenue growth over the next decade. I could be wrong about that. We'll see. But I do think that they are sort of, getting to a point where they have some market saturation, and continuing to have, double-digit revenue growth will be challenging. In terms of their net income margin, they had a 30% net income margin in this past fiscal year. Let's say if we take the average of the last 4 fiscal years and we carry that forward, 27.71%. And then we have a free cash flow, stock-based comp adjusted free cash flow growth rate of 4% in this upcoming fiscal year, followed by 6%, 8%, 8%, 7%, 7%, 7%, 7% going forward here. I have a perpetual growth rate of 3.5%, which is a little bit generous for me. I usually go with a 2.5%. But I went a little bit higher on this one because I do think Adobe is a strong company. I think 2.5% perpetually is low for them. So I went with 3.5% as a perpetual growth rate. You can see my numbers here for the weighted average cost of capital, which came out to 12.72%. And I get a fair value of equity of $263.81 per share. Adobe closed today, December 15th, 2025, at $351.15 a share. You might think that seems really low. And, maybe it is. But if let's say we reduce our required return to what I would consider like a return of the market, and we say 10%, okay, now you're at 382.92. So if you want to not go with that weighted average cost of capital as your required rate of return, but like a return of the market at 10%, you can get to a valuation where the stock might be undervalued, like a lot of people think. Another way to look at this is price to earnings multiples. So buyback rates, I factored in here of 5% this upcoming year, and then 4%, 3%, 3%, 3% after fiscal year 2030. With the number of shares outstanding, you can see here, if you think this could trade at a PE of 25, which I'm not so sure it would trade at a PE of 25 that far, 5 years out into the future. Right now it's trading lower than that. I don't want to commit to saying it's going to trade at a multiple like that, but if you think that it will, you could say that it would double your money over the next 5 years from here. So this is kind of what I mean, is that I don't think it's bad. I don't think the stock is necessarily, overpriced or anything. I think it's probably closer to fair value for what I would look for in an individual stock. Depending on how you adjust these numbers, what you think their revenue growth rates will be, what you think their net income margins will be. If you think they'll maintain that 30%, maybe because AI will help them to maintain a higher net income margin, these are all things that, could make the stock outperform this valuation. But this is, I think, at least one way to look at it, and, to be a little conservative about what you might think it could do into the future. You could see I maintained the 3% growth, 3% buyback rate out beyond 2030 to 2031, 32, 33, 34, and 35. And then out into after fiscal year 2035 with the number of shares outstanding you see here. If that net income number holds true that I had in the valuation, you can see what it would trade at different levels. If you think maybe a P of 20, you're looking at $918.79 a share out after fiscal year 2035. So, not quite tripling your money there, but after 10 years, but, not a bad return. So long story short, guys, I think that Adobe is not a bad buy here at all. I'm still going to continue to look at it and think about it and consider, maybe if this is a stock I'm interested in investing in. I'm not invested in this one yet. Um, so not bad here, not great. I would just say, it's okay here, I think. One thing I'll actually clean up here, this shares outstanding, I had earnings release. I do want to just edit that a little bit. So this number came from fiscal.ai. So I just noticed that as I was doing this. The 10K for the fiscal year is not out yet, so I had to try to I used the earnings release and I used some different sources to try to, you know, get some numbers here that would work. And if you follow me on X at Stock Sale Flyer, once the 10K comes out, I may update these numbers again, and just check it versus the annual report. So I hope that was helpful. Like the video, subscribe if it was. Again, follow me over on X at Stock Sale Flyer, and drop a comment. Let me know what you think. Thanks, guys. Bye.